There are many things that your financial advisor and your CPA should be telling you in order to help you save money on taxes and build wealth, but unfortunately they don't. I don't know why, but they don't. And ideally, you would have your CPA kind of be both your financial advisor and your tax strategist, but unfortunately they're not. I'm Davi. I'm a realtor and real estate investor in the LA area. And today we're gonna talk about what your financial advisor or CPA should be telling you. I'm gonna take myself as an example. I am a business owner and I get taxed very heavily if I don't strategize every year from the beginning of the year. Fortunately, now I own 3 Airbnbs. I'm on the hunt to buy more. And my CPA, neither my past financial advisor, never advised me or told me to purchase any Airbnbs. They never explained that it kind of operates like a hotel, meaning I get to depreciate asset against my income, which will consequently save me money on taxes. As a business owner as well, you can also take advantage of things like Section 179, equipment, commercial vehicles, which you can also depreciate against your income, helping you get your tax liability down to zero if you strategize it really well, legally. Unfortunately, I don't know why my CPA never told me about that, but the funny part is, every time I went up to him, I was like, hey, listen, I'm thinking about buying this house. It's gonna be an investment property. It's gonna be an Airbnb. It costs this much. How much of it can I depreciate? And he was like, oh, you can actually depreciate a good portion of the property against your income. But he wouldn't explain how, he wouldn't explain how much, and he didn't really explain the cost segregation process either. So I had to ask him, do you know a company that does a cost segregation study? Yes, I do. Can you email it to me? Hang up the phone call. He does not email it to me. I have to remind him again, sends me that company. I call the company. Once I speak to the company, then I start to understand how it works when it comes to depreciating properties in the United States, right? My CPA should be telling me that. He should be the one taking the initiative, but unfortunately, it's never been the case. I've tried different CPAs. I don't know why. It was the same story with the car. Section 179, never told me about it. Never said, hey, looks like you're gonna be paying a lot of taxes this year. You should get this. And I actually paid the guy fairly well, I would say. It's about like $4,000 a year. And it's been going up every year because my income is growing and I don't get much advice. Now, financial advisors, they could be the ones that say that, but they're just more about like getting yourself out of debt, which is important. I agree with them. Protecting yourself with retirement accounts, life insurances, and all of those things. But unfortunately, I don't look as a retirement account as a form of building wealth. I look at it as like a bonus. Let's just say you were putting $75,000 a year in your retirement account, right? And that $75,000 is growing about 10% a year, right? The good thing is it's tax-free. The limited part of it is you can't really use that money unless you loan against it or you pay penalties to use it, or you can only use it when you retire, which is, for me, that's my goal. I don't plan on touching it. Real estate, on the other hand, commercial, hotels, Airbnbs, they'll appreciate a lot more than stocks do typically overall. And once you appreciate, you can loan against it. You don't pay taxes, you don't pay penalties. You only pay the interest rate, which is a lot lower than 35% tax a year. And you can use that money to either buy other real estate, invest in your business, grow your business, and keep growing wealth that way. And unfortunately, financial advisors don't tell you that either. I was watching this Netflix show, I think it's about My Rich Life or something like that. I don't remember the name. And this financial advisor, this guy, he was heavily advising people against buying real estate as a place to live, which I agree with him. Like, if you don't earn a really high income, you should be buying investment properties, which he was preaching that. But he wouldn't also come out and say that to his clients. He would just say, if the clients were already doing it, oh yeah, great job. Very smart. You're not paying your mortgage, you're having somebody else pay your mortgage. But he would not advise the other clients to do the same. So I feel like that's what a lot of financial advisors and CPAs lack. They don't really help build wealth faster or strategize on saving money through investments and lowering your tax bill. So could be a little bit better on that, and unfortunately something that you kind of have to like research by yourself. But if you do have any questions and you are looking to buy or sell real estate, please reach out. I've helped hundreds of clients buy and sell real estate. Love what I do, and I'll see you guys in the next video.